How do you keep your money warm as the weather gets cold? Well, get this. The options team at Goldman Sachs suggesting betting on stocks like Columbia Sportswear, Advance Auto Parts, and even Domino's Pizza ahead of what could be a frosty winter. Is this a smart trade? Welcome to Trading Nation. I'm Brian Sullivan. Wald and Erin Gibbs are your Trading Nation team today. Erin, we'll begin with you. The idea, I guess, the options team is saying last year was very temperate. This year in the East anyway, where most of America still lives, it could be very cold. Is it too simplistic or a good idea?
There are some picks that actually do make sense, and one of the ones we looked at was Johnson & Johnson, which definitely has had a correlation to colder weather. They own brands, a lot of moisturizers like Neutrogena and Lubriderm. They also own Tylenol and Sudafed, all those cold remedies. And certainly, just from a valuation perspective, they're actually pretty reasonably priced right now, and they offer a 3% dividend yield. So, yeah, if it's colder, you could definitely be running out for dry skin and runny noses.
Yeah, well, I've got both of those, unfortunately, right now. So maybe there's something to Erin's trading idea. All right, when you chart it, you got J&J, you got COLM, Columbia Sportswear. What do you want to look at?
Well, Brian, let me start off by saying that this is a horrendous idea. This is a strategy based solely on predicting what the weather is going to be. And listen, I don't know if they wrote this as more of a tongue-in-cheek and they were having some fun with it. But if you look at the performance, if the weather is going to be warmer than expected, all these stocks tend to perform bad. So we'd be better off spending the next 3 minutes, Erin and I, talking about what we think the next few months the weather is going to be in the Northeast. I don't have a view on what the weather is going to be. I'm not a meteorologist. I'm a technical analyst.
They don't have a view either. Don't worry about it.
All right. So here's what we did instead. We neutralized this. We said, you know what? Let's do a long-short idea. Let's pick one stock that looks good. Let's pick one that looks bad, and let's pair them together. And that pair would be longing Columbia Sports against a short position in Tractor Supply. And we can chart this by looking at the relative ratio between the two, putting Columbia in the numerator. And what that ratio is showing is that since 2007, Columbia's been the big underperformer. We've seen leadership in Tractor Supply, but now we are seeing some signs of a turn there, the relative strength going towards Columbia. It broke the downtrend. It spent the last few years breaking. It broke out to the upside, and even more recently, it's pulling back to that breakout point, making it a tactical call and a level to add that position, put that position on as well. So long Columbia, short Tractor Supply would be my takeaway from that list.
And I guess the idea being if it's really cold, you ain't planting the back 40. Thus the Tractor Supply short. Wald, both of your points are very well noted. Wald, thank you very much. Erin Gibbs, please pass the Sudafed. I think I need it as well. Erin, thank you very much. Folks, check out the live version of Trading Nation and Power Lunch on CNBC every day. We'll see you there. Take care.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.